Hello and welcome to Startup Scaled to IPO, a Controller's Perspective webcast produced by the Controller's Council. Hi, my name is Lindy Antonelli. I'm board chair of the Controller's Council and partner at Armanino, and I'll be moderating our webcast today. Just a couple items of housekeeping before I introduce you to our panelists. We will have a Q&A a little bit later. We do recommend that you type in your questions early into the GoToWebinar control panel question feature. That way we'll be able to get to as many as possible. And now to our panelist intros, and then later I'll share more information about you with Save the Dates about the Controller's Council. First, a word about our sponsors. Sage Intacct, world-class cloud financial management solutions built for accounting and finance professionals. Flowcast, financial close management software and the controller's best friend. Bill.com, fully digitized AP and AR. No in-person approvals, no paper needed. And Armanino, top 25 accounting and technology consulting firm and strategic business partner to the financial organization. Oh, and we have a surprise for you. One of our esteemed panelists, Mike Whitmire, wrote the book, Controller's Code. We will be giving away 3 copies in a raffle after our webcast. Good luck. One more thing about that. There is a link on the bottom of that slide where you can order the book yourself. And now, what you've all been waiting for, our esteemed panelists today, Brandt Kucharski and Mike Whitmire. I'll let them introduce themselves in more detail, but Brandt is the Chief Accounting Officer of Grubhub and an instrumental contributor to the Controller's Council. And Mike Whitmire, co-founder and CEO of Flowcast, author and director on our board. Thank you. Brandt, would you like to begin?
Yes, hi, it's very good to be here. My name is Brandt Kucharski. I am the Chief Accounting Officer of Grubhub. I'm excited to kind of share my experience a little bit and just a little bit of background. I spent many years in public accounting prior, did a bunch of IPOs on the public accounting side, did a bunch of Sarbanes-Oxley, did a bunch of M&A and due diligence projects, and then kind of took that experience and joined Grubhub early on when there was less than 50 people and seen the brand grow from a couple million revenue to where it is today.
Thanks, Brandt. And Mike?
Yeah, this is Mike Whitmire, as mentioned, co-founder, CEO of Flowcast. Super excited for today's webinar. I love the IPO topic. I have had a lot of coffee this morning, so I'm caffeinated and ready to go. A little bit on my background. So I'm a career accountant. I actually started my career at Ernst & Young here in Los Angeles. I was auditing mostly media and entertainment companies and really focused on the mid-market. I was very proud. I made it 3.5 years in audit and then decided to jump ship and moved over to a software as a service company in LA by the name of Cornerstone On Demand. I was the 5th person in the accounting department over there. We had a really, really successful IPO. I ended up being there for about 4 years, and we scaled the team from 5 to 50. It was a lot of fun. It was a lot of work. Learned a whole lot, and one of the things I learned was that the month-end close was a huge pain point for us, and I just didn't see any great software out there to help us with this really, really complicated process. And so, yeah, my time in industry inspired me to found Flowcast, and that was back in 2012. So that's what we do, close management software. We help accountants close the books faster, more accurately. Have been partnered with Brandt and Grubhub for many years at this point. He was one of the early ones to take a risk on us. So really grateful to just be here today and especially be speaking with Brandt at this point. So excited to chat about IPOs.
Thanks, Mike and Brandt. I'd like you guys to maybe describe your early journeys for, as in the startup world, what it was like. You guys mentioned a little bit about the size of the team, but, kind of what was your journey as a startup for both of you? Mike, you can go first.
Yeah, so in my Cornerstone days, I joined, we had 95 employees total. And as I mentioned, I was the fifth employee. And I remember interviewing and the CFO told me, yeah, we're going to be going public in 12 to 18 months. And they had, up to that date had raised very little capital. They had just closed a $40 million round from Bessemer. And the goal of that capital was to go public and grow from there. So my introduction was, yeah, in kind of this weird LA ecosystem where not very much like the Bay Area. So we kind of had to be a little more cash flow sensitive, but try to have that hyper growth of a Bay Area company at the same time. And what that meant was we put very little money into finance and accounting. So when I got there, we're 12 months out from an IPO, and the state of the department was we had been on QuickBooks. We were still on QuickBooks, and we were trying to transition over to an actual, grown-up ERP. We were going through our first audit ever, which was kind of mind-boggling to me. And we were trying to implement new revenue recognition guidance. If any of you remember the 081 days, that was the first kind of hellacious version of 606. And, meanwhile, trying to draft an S1, hire out people, put some SOX controls in place, and start reporting more regularly. So it was a lot. I was drinking through a fire hose for about a year. But I wish I had a better answer. But the way we got through the IPO was just by hiring some more people, throwing bodies at the problem, and just trying to make it happen. And that continued as we grew to a company of 800 or so people. We passed 200 million of ARR, and we were still doing a lot of things very manually behind the scenes. So from an accounting perspective, I would not say quite as smooth as a business perspective, and a lot of challenges as what I said kind of led me to found Flowcast.
Wow, that's awesome. And Brandt, what was life like at Grubhub as a startup? I know you were one of the very early employees there as well. So you've got a similar background as Mike in that perspective. But tell us about the early days at Grubhub 10, 11, 12 years ago.
I mean, I remember joining and there was one staff accountant and that was it. And that was kind of a person to just do the bills and really joining without any real internal controls in place, really no evaluation of technical memos and kind of process, and then kind of having this entire duty to get the company ready to go public from the accounting side in 18 months or so was kind of the game plan. And I remember sitting down there just with the giant Excel and going balance sheet by balance sheet item and income statement by income statement line item, listing out all the key risks of the business, of everything that can go wrong from an operational side, from an accounting side, and then come up with this massive list, and then putting in key controls that mitigate those risks, if that's fictitious employees, duplicate vendors, all that sort of thing. And then I remember trying to start to have the conversations about, hey guys, we're a startup that is in hyper growth mode 10 years ago, and we have to put some processes in place and key controls, and people have to start doing some items that they may not have done before, right? So it's one thing to kind of document everything and get everything mapped out, but if people don't follow the controls, it doesn't do a lot of good. And I remember just having to, use a lot of soft skills to get people to do some processes in various departments like marketing and engineering and other departments to kind of adhere to the controls and get things going and really get them excited about, hey, if we put a little work in now, there's gonna be an outcome a couple of years from now. So that was pretty cool. And I remember the excitement of going from a couple cities to 5 more cities to 10 more cities. Early acquisitions of Campus Food, of Fango, of all these various areas, new product initiatives. I remember when I joined, there wasn't a formal app on the iPhone or Android or anything like that, and one of our developers built it out, and the excitement around that, and just the excitement of there used to be this thing called, if somebody signed up a restaurant, they would send an email to the crush and everyone would get an email and everyone would clap and get excited. And you can do that when you're 30, 40 people, and then obviously the company just grew. And watching the company go from 50 people to 300 people in a month or two to 500 people and just growing. And we had a 1 floor of an office space, and I think we outgrew it in a couple months. We had to rent out the first floor, then we had to rent out like a for like a better word, like a giant garage, and put heat and air conditioning in there, and then kind of scramble to find a new office building where we're at right now. And just all this crazy growth stories and, getting to work with the founders and everyone at the company to really get this thing ready to go public and grow and get diners and build out the product and all the marketing and everything. So it was very exciting.
That's cool.
Brent,
Mike
you have me
mentioned
reminiscing on. I was just going to say, Brandt's segment just had me really reminiscing about the early days of Flowcast. Yeah, when you're everyone can slap each other on the back when you have 30 or so people. And yeah, accounting's kind of an afterthought at that point, but that's around when you bring in a brand to try to whip you into shape. Brand, I'll tell you, I had a similar experience at Cornerstone, getting other people to, get on board, people from other departments to get on board with kind of this new world of accounting was definitely a challenge and requires some serious soft skills to convince them to start operating that way.
Hey, Mike, did I ever share with you the pizza story and how I got our engineers to track their time for IT capitalization? Ever share that one with you?
No, I have not heard that.
So remember, this is 10 years ago. There's an accounting standard that says if you have engineers who are building a product, you have to capitalize a portion of their wages, depending upon the stage of development as an asset and all that. And I remember when I first brought that up to engineers, it was like the look of death, right? Of saying, hey guys, we got to start come up with a means to kind of, track our time and build an asset. And, engineers don't like to hear that generally, right? So I remember I came up with an idea of like, look, if you guys give me the spreadsheets and information I need, I'll buy you guys pizza each quarter, right? So I used to buy the guys pizza every 3 months out of my own pocket. It's a couple $100, and it became a competition of who can give me the best data, who can turn around the quickest, the cleanest, and it kept getting better and better. And I kind of made it a game that worked pretty good.
Oh, nice. If you can gamify it and make it competitive, that's super smart. My approach was a little different. The people I was trying to get to change their behavior was our setup and support organization. They had to start reporting on a monthly basis to me the percentage of the projects that they were completing. And I'd send them a spreadsheet with 1,000 line items on it. And these are the VPs. They had to go through them one by one and punch in the percentage of that project that was done that month. And yeah, death stares the first time I did it. I'd have to email 4 or 5 times to try to get it. And I settled on a very different strategy than you. I went for kind of I wanted them to feel sorry for me, like pathetic accountant route. So it was always, I was coming from the spot of like, look, I don't want to do this either. You guys, you don't want to do it. I don't want to do it, but these are the rules and I'm just trying to get my job done. And I'd go with like the tail between my legs, puppy dog approach, trying to get them to feel sorry for me. And that ultimately worked for me to the point where we went from a rather, tough relationship to building a good relationship. And those two were actually the first seed investors in Flowcast, which sort of blew me away. I thought I was just the annoying staff accountant or, senior accountant who annoyed them. And it flipped into them actually helping fund Flowcast. So that was a lot of fun.
Yeah, you have to make accounting practical, right? And, you can't come in there just dropping accounting standards 606 or 350-40 says that, you have to be able to get people to relate why you got to do it, why it's important, and kind of get their buy-in. And, you have to use some finesse to get people to really, follow it, because if you just come in there like a bulldozer, nobody's going to listen.
Yep. Yeah, explaining the why is big. And in my example, at least, they directly impact revenue, and that's so important. So it does play a huge role in our company.
Yep.
I just love hearing those stories of the early days. I think that's so fun, and I know our audience is relating to that as well. Brandt, Mike had said that they were on QuickBooks and had to move to a real ERP. What were you doing as far as technology in those early days, and kind of what was the growth plan there as you were marching through the IPO?
It's funny. We were on QuickBooks, back 10 years ago or so, and I remember that I probably had 6, 7, 8 rounds of interviews, and in each round, I think somebody brought up the system and how would I scale the system and what would I do and all that. And everybody identified that, QuickBooks seemed to be an issue back then. And, I didn't really know any better. I was coming from a big consulting firm, doing technical accounting and all that. So when I got in there, I quickly learned that QuickBooks is probably a year out from breaking, right? And just weird things of like, our model is we collect all the money from the restaurant and take a percent from there and then send it back to them, a week or a month later. And we issue payments like ACHs and checks. And I think back then, it may have only been a couple thousand a week or 3,000 checks or ACHs, but that's still a transaction that's going through the system, right? And soon the 3,000 became 5,000, 6, 7, and kind of ramped up, back in the early years. And it was stalling the system. It would clunk out. And, if you can't pay your liabilities and turn around that money, that's kind of a big issue. So luckily, I was able to kind of do some good research, and, I found Intact. That was a big part of kind of our future growth. And especially, once we start acquiring companies and be able to consolidate and everything there.
Cool. And I know you're working with Flowcast as well. So kind of the systems integrated approach, is working well, I think, for you guys too, right?
Well, yeah, Flowcast is brilliant. So, the way I use Flowcast, if anyone here on podcast, webcast was in public accounting, I always use this analogy, right? If you work on a 4-week audit, right, you don't wait until the final week for the audit partner to review all the files. You go to an area like cash or deferred revenue or prepaid, you go in there, you do a schedule, you mark it review, it goes to the manager, they review it, and goes to the partner, right? It's real time, right? That stuff is completed. And I think that's what was missing from the industry, at least in my side for years, because you couldn't really review until everything was done, right? If I reviewed on day one without a system like Flowcast, I wouldn't know if the number would change. I would have to go back and do a manual check, and it wouldn't kind of lock in things, right? So, now it's super useful where, rather than wait to day 6 or 7 to close, I can kind of get a head start on day 1 and go through cash and prepaids and look at fixed asset additions and kind of do the various items. And it allows me to be a lot more precise with my review, get a lot more comfort, and kind of spread the work out so everything isn't just day 6, right? And what ends up happening is day 6, you're allowed a lot more time to really focus on the risk areas and areas that really need a lot of evaluation, and just allows me to do a better job reviewing and close quicker because, I don't have to wait to do everything near the end. If that makes sense.
Yeah, definitely makes sense. I mean, that's using the tools. Yeah, Mike.
And I was going to say, the audit software that I used at EY very much inspired Flowcast. I remember the transition from audit to accounting being very difficult because, you come from a Big Four environment where everything's well documented. You can always look at prior year work papers. It's well structured. You see who signed off on it, who reviewed it. Your work papers tie out to the trial balance. So it's really nice and it's self-contained. And then I got to Cornerstone and nothing's written down. We have no prior year work papers. Reconciliations are constantly moving. My controller is just trying to, keep her head above water while we're going public. And what Brandt was describing happened regularly. She had no other option but to just wait until the end of the close to review all the reconciliations. And when you have to operate that way, things can blow up at the 11th hour. And you can end up working a ton of hours and having really, really brutal audits as a result of that. So I love, Brandt, I love hearing that, and that's one of the benefits you see, because I spreading out that review work over the period of the close, I think is really, really impactful, and we empower that with the different integrations to the Recs and the ERP as well.
Very good. So, Mike, I mean, I really like your perspective, at Cornerstone and public accounting and now at Flowcast. You've had such great experience with, rounds of funding and IPOs and public companies. What's your perspective on how to, when you're going public? I mean, maybe you could just talk a little bit more about that. What else is important in scaling the business?
So yeah, my journey's been kind of fun. Like, I started big company and I've sort of been working my way backwards from there. So going from EY to Cornerstone to then founding Flowcast, I've been able to see sort of every step now. And it definitely changes just as you're moving. And you go from just kind of, I'm out there, I'm on the road, I'm raising money, just trying to make stuff happen. I'm also trying to be the CEO, the VP of sales, the CFO, CRO. You just throw all those titles out there. And then you start to get you hire more people out, you can do new and more impactful things. You start to put in a little bit, some more processes. We began, we're a little unique, but at Flowcast, I did our accounting for the first 2 years of the company. We then handed it off to one of our customer success managers. She obviously has a background in accounting, so she handled it for a year from there. And then we hired our first full-time accountant after that. So we never outsourced accounting or bookkeeping or anything like that. My logic is we're the company full of accountants, and if I'm outsourcing my accounting, that's a pretty pathetic situation to be in. So we hired that way, and then we started to put some processes in place. I think earlier than most companies, we implemented an ERP very early on, so we're already fully implemented on that. I'm really proud to say that we have every single transaction in the history of Flowcast is inside our ERP, which is going to make life much easier as we scale and move forward with things. And so yeah, we've turned heavily to software because of some of the challenges I saw at Cornerstone. And I will never forget this story. I was implementing revenue, and it was a huge project and took a lot of time. And once we got it implemented and got into our regular cadence of closing, we were growing so fast as a business that the amount of contracts coming in the door just created an unbelievable amount of work. And I went to the CFO and I said, hey, I'm doing these contracts. It takes me roughly X minutes per contract to get it done. It's coming in at this clip. I'm looking out to our 2015 growth plans, and I think that by then we'll be putting this many hours into booking revenue journal entries. So me and another team member went and we said, hey, we really want to look at some software. We had taken a look at Zora. They were really early stage at the time, but would be able to automate some of our RevRec problems. I begged our CFO to do it. It was a $12,000 investment. He said no. And the senior accountant I was with, she has some serious guts. She goes, can we just skip one freaking happy hour and get this software? It'll make our lives so much easier. And she was still with the company after that, which I was kind of surprised by, but she was totally right, because we fast forwarded out a year from there, and all of a sudden we had gone from 3 people doing revenue to about 20 people doing revenue. And I have to imagine that if we had purchased Zora at the time we were recommending it, we probably would have had at least one less person helping close revenue, which right there is a nice cash savings. And so kind of after learning all that at Cornerstone, I learned some lessons, and we've been really, really proactive about implementing systems, making sure things are connected. We create the sales order, and that gets invoiced to the client, and revenue gets recognized. So that's been really big, is leaning on technology early, and has allowed us to remain, fairly slim in the accounting department, despite being, we've raised $93 million to date. We have reporting requirements with our VCs, and kind of have to operate a little more grown up at this point.
Wow, that's awesome. Thanks, Mike. Hey, Brandt, Grubhub went public in 2014. I know, you put in the Intact system, you got your month-end close, solidified with Flowcast, but what else was going on back then when the experience of going public, and, any insights you can share with our attendees here today would be most appreciated.
Yeah, first, I want to say I have the greatest team I can possibly imagine. I have Rob and Kathy and everyone who was, Kate Roberts and everyone that was part of this process back then. It's absolutely fantastic. So it's a group effort. Like, it's never one person who is doing this. So it's a real group effort. Second thing is, Lindy, Grubhub went public twice, if you remember, in a way. So we started our first IPO October 1st, 2012, went through the process, and then basically we're ready to declare effective. And then we merged with our biggest competitor, Seamless, in 2013, and then kind of started the process again. And then, did that process, October 2013, and then obviously filed on April 2014. So actually it was twice, which a lot of people don't know. The process was amazing. I learned a ton, and I think the preparation made the process pretty simple. And I shouldn't say simple, pretty fluid, pretty efficient. It's probably about 18 months from the IPO, I started to really put together an IPO plan of, how are we going to do this, and how are we going to make sure that, SEC doesn't have comments that slow down IPO. We really address everything. We really mitigate the risk. So there's a couple of things I kind of did. First one was I looked at the 10 most recent IPOs, and I went through all the comment letters. And I remember spending hours downloading comments and bucking them by financial, operational, technical, accounting, and put it into a giant Excel. I think back then I was looking at like Zillow or OpenTable, some of the older IPOs, and I kind of saw a trend of maybe 5 or 6 areas that SEC at that time was focusing on. And back then it was stuff like, Series C, D, E equity. Is it debt versus equity? Is it warrants? Is it supercharged? Should it be mezzanine equity? Kind of these technical issues. They're focusing on cheap stock. They're looking at the acquisition, how you think about some assumptions used, and just some other items. So I think I was kind of able to go into the IPO kind of knowing what the SEC hot buttons were already, checking those off the list. And I tend to think that, some of the SEC reviewers follow certain companies in certain sectors. So I was able to kind of really get an idea as to where they're kind of focused on and kind of eliminate those risks. And I think the second thing is, you start to think about some of your technical memos and, really putting a lot of time in on technical memos, getting comfort with your auditors, signing off on them, and really kind of gaining consensus that, this is the memo that everyone feels comfortable with that mitigates risk for the company, right? Then I think too, putting in a new system definitely helped a lot because, as you start to go public, you start to think about Sarbanes-Oxley. And it was interesting. We were Sarbanes-Oxley compliant to an extent about a year and a half before the IPO. So when the underwriting process kind of started, there's always a concern of bankers and diligence. Are you ready to be a public company? What do you have in place to mitigate risk? Can you close? And we're able to show them a risk matrix and flow charts about yes, we are. And they haven't been tested, fully from SOX compliance, but you're able to kind of get a head start. And I remember hearing comments that they haven't seen this before. So I kind of think that a good IPO starts with a lot of offense and mitigating risk beforehand, looking at SEC trends, getting your Sarbanes-Oxley in place, getting your technical memos knocked out and signed on by the national office and everyone aligned. And then from there, just kind of optimizing your close process so you can close in 6 business days and reach earnings targets and everything there. The IPO itself, it was a lot of work. The one thing I would have done different, I would have brought in my SEC director a lot sooner. I think she joined the company March of 2014. We went effective April. I would have brought her in 6 months before because in both IPOs, I was writing the S1 and doing the items. It was just too much. And, it's nice when you can take a step back in review versus trying to review your own work that you're doing in terms of writing an S1. So that is definitely one thing. And my at that time SEC director, assistant controller now is just wonderful. And that is definitely something where I would hire that department in much earlier to allow things a lot more efficient. And it's interesting, Lindy, where you go to do an IPO and people don't realize that you still have your day job. So you're working 8 to 5, right? You're doing your regular stuff, all your stuff. You're still closing the regular month. And then on top of that, you have calls mixed in with bankers and S1 and comments and attorneys and all that. And then, you have to hop on because somebody wants to review a draft of pages, 75 to 85, 9 at night. They want to make the changes. And then, when you go to make changes, even nowadays, the changes are all manual where somebody's writing something by hand. You send it to the printer, then you got to review the changes to make sure the changes were made right. And even numeric numbers, because there's a control copy, you have to kind of review to make sure that, if you change something to a 29, that it wasn't a 39 and all that. So it was a lot of work, but it's a great experience. And, it's something that in retrospect makes you very marketable. And it's something that's pretty rare. I'm very fortunate to have had such a great team and that allowed me to do it and just go through this process.
Yeah, I just want to echo that. I have never worked more in my life than that year before the IPO. My decision to leave EY was actually made when one of our utilization reports came out, and I realized that I had the highest utilization in the Los Angeles office. I was like, all right, I got to get out of here. And it was interviewing at Cornerstone, and I remember the last one with HR. I was talking to the guy, and I was like, hey, I know this isn't, the best question to ask, but I got to ask, like, what kind of hours does the accounting department work? And he goes, well, I leave every night around 6:30, and the door's closed, so. Yeah, they're gone. And I'm like, whoa, okay, 6:30 or 7, that's unbelievable. I can't wait to only work those many hours. I started, and it turns out that the door that closes is actually on an automatic timer. And so it automatically shuts at 6 p.m. The accounting team is still back there. They're ordering dinner and working until midnight. So I went from working a lot of hours at EY to working even more hours at Cornerstone, like what Brandt just described. I mean, we regularly were there till 2 or 3 a.m. and back in at 8 the next day. Just you have your day job, you're drafting the S1, you have all these other projects going on. And I never thought of this, Brandt, but the one area we actually hired appropriately then is the SEC director, because we had her in about 9 months before the IPO, and her drafting the S1, she worked arguably the most hours out of anyone, which did free up our CFO to have more time to, pick his head up and think more critically about specific comments, or how are we going to be strategic during the roadshow? How do I, handle this with the lawyers and the bankers? So that's a really good piece of advice. I hope everyone has a takeaway with that. Hire the SEC director 9 months before you go public.
Yeah, I agree with you, Mike. I would have done it differently with that. The problem, I think that thought ran through my head, but I think I was thinking, well, what is this person going to do? There's not an S1 yet, and we're good on items right now, but I'm sure I could have found stuff to do and realized that, hey, maybe slow for 6 months, but it's gonna start cranking, right?
Yeah, you can get a draft going, or she could have done the research that you were doing, kind of preparing it. There's all kinds of projects that can make your life much easier if you bring someone in with that type of expertise.
Well, the one thing we did too, Mike, is we actually did for a few quarters. This is maybe 2011. We did do a sample queue, and I remember working with our auditors to say, look, here's our timeline, and kind of went through the process as like a mock exercise to kind of see, like, hey, are we ready? Can we do it? What does it look like? Can we turn around feedback? Can we move fast, and estimates and all that? So that was another thing I thought kind of helped, just like the preparation ahead of time, right? Like if you go in, if you go into an S1 and you haven't researched recent comments in your sector from the SEC, or you don't have full risk matrices built out with controls, you're kind of setting yourself up, because the bankers are going to ask you. The diligence investment bankers do is heavy, right? I mean, they're really looking like, look, can you be a public company? Can you handle the close? And, how do I know you're ready, right? Because a lot of companies go public and they're not ready.
Totally. And we had that exact situation. I'm embarrassed to admit this, but around my account, deferred revenue, it was so manual that the auditors were threatening a material weakness around the controls there. And we had to fight really hard to get that reduced to a significant deficiency, which we're ultimately able to make that happen. But that might have been the most stressful moment for our CFO. Getting ready to go public was when the auditors were starting to throw around material weakness. But that said, we did rely on the auditors quite a bit early on for helping us prepare for the IPO. What are some things we should be on the lookout for, because that specific group within PwC had done so many IPOs that they had a lot of good insight into it. So as much as it's reasonable, I would suggest chatting with your auditors and getting advice on how to prep for this.
Very good advice. Well, some questions are already coming in, and that's exciting. Just a reminder to our attendees, you can submit a question for Mike and Brandt through the control panel. Okay, so if you find that, go ahead and type away, and we'll be getting to those questions in just a minute. I do have another slide up that is, I think it goes really, really well with what you guys have been saying and talking about. If you can go to the next slide, please. And here we go. And it's really, it's called Elements of an Efficient Finance Department, people, process, and technology, and how they all work together. And you guys have really been hitting home on this concept. I mean, you both talked about the people, about a great team and working together and collaborating and getting that SEC director in early. We've talked a lot about technology. I mean, Mike, you co-founded, Flowcast based around, what you had seen as, weaknesses in the month-end close process. I mean, that's awesome. And Brandt, you're using, tools such as Flowcast and Sage Intacct to really fuel the finance department. But maybe we could talk a little bit more about the process, because that's kind of what I was hearing around, a potential material weakness from the auditors and shoring down your month-end close and automating those processes. So I don't know, Mike and or Brandt, do you have anything more to share in that area? And then we'll get to the Q&A.
Yeah, I have some thoughts on it. Brandt, you got anything?
Go first, and I'll chime in after you.
Okay. Yeah, I'm going to try to not get too in the weeds, but definitely explain the pain points. So at Cornerstone, we were a software as a service company, and we sold contracts with about 40 different deliverables on that contract. And the revenue guidance that came out was around the multi-element arrangements, and we had to allocate the contract consideration across the various deliverables. Sorry if I'm losing anyone, but it was an insanely complicated process. A lot of assumptions went into it. Those assumptions were revisited on a quarterly basis. And then the way we actually allocated that revenue was I had a workbook that I had built. I would go in and manually punch in every single number from that contract into this Excel workbook, run it through my formula, allocate the revenue, review it, see if I had to make any manual changes to it. I would then take that workbook, view it, see if I had to make any manual changes to it. I would then take that workbook, I would open up the revenue commitment form, which was customized for our company. I would then manually key in every single number that came out of my workbook. I would then manually enter the revenue recognition periods for all those items. I would hit save. And from there, the software was recognized automatically on a monthly basis. That was great. But then I had to enter into that process of reaching out to our service team, getting a spreadsheet explaining the percentage of each project that was done. I would then get that workbook. I would go back to NetSuite. I would open up every single revenue commitment with an open project on it, manually calculate the dollars to be recognized, do that. So as you can tell, there's a lot of manual work that went into it. It was just like very, very error prone because of the volume of work I was doing. And the comment I made to our CFO is I was like, dude, it's completely unreasonable to think this is appropriate. I can be an A+ student. I could get a 99.9% grade on this work, and that's unacceptable. That's a significant deficiency simply because of the volume of work I'm doing. And that it played out that way. And then of course, you have odd events like someone cancels a contract or renew early. It requires all these manual adjustments. So, all it took was PwC selected 50 contracts. They found an error in one. All of a sudden, they pick another 50. They start digging in, and then they start thinking about the process. And it's like, well, as you scale, this isn't going to get any better. And that was where we started to have the discussion around a significant deficiency versus a material weakness. And I just go back to if they had given me Zora, I would have integrated it with Salesforce. We would have been pulling data from the opportunities into Zora. Zora would have then allocated the consideration for me. I would have booked one single revenue journal entry or have had it integrated and saved a ton of time and had a much better process and avoided audit headaches. So, that I would encourage everyone to really look around the team and different areas and see where there might be pain points like that. A lot of people at the staff and the senior accountant level, they're not like me. They're not going to go and proactively complain about manual work they have to do. They're just going to kind of deal with it. So I do think it's on the controller and maybe the CAO to actually proactively go to their team and say, hey, where is it manual? Where is there some risk? And where do we think software could help with this? Because to me, that's the best way to mitigate risk and scale efficiently.
Yep, that's right. Brandt, I know you automated quite a few processes over in your tenure as Chief Accounting Officer over at Grubhub. Did you have similar experiences when automating, things like expense reports or AP or, and especially, the data? I mean, you must have significant amounts of data coming in from other systems as well. So, integrating systems as well.
Yeah, I think you heard me mention earlier about our challenges with QuickBooks, and it was kind of breaking. When we went to put Intact in, it was about a 3 or 4 month process, but we built an API in a system that basically called all the data on a daily basis from our database and our ordering system directly into our Intact, our accounting system. And you can kind of do a quick reconciliation each week, each day, each month to kind of get comfort that the data you're using from the month from your database agrees with what's in your accounting system, general ledger, and your payments are on point and everything there. And, really the old process part of that was kind of like Mike's process. It was very manual to get revenue and information over into our accounting system, and using technology with an API to really feed the data in real time. It was a massive, expensive project that we took part, many years ago, but it's worth it, and it's still the same system in place that works, and it's been great for us.
Fantastic. Okay, well, I do have some questions coming in. Maybe we can go to the next slide and transition over to Q&A from our audience. There we go. We have about a few minutes left here at the top of the hour. And Brandt, the first question's for you. One of our attendees wants to know how your role changed through the different phases, startup to funding to IPO, and how you as a controller, and chief accounting officer, what skills did you need to learn or develop over the course of that, the growth and the different stages of the company?
I remember the biggest challenge was once we started acquiring companies and just really starting to understand that, look, I just don't have one team now. Now I have 10 teams, right? I think Grubhub's acquired a handful of companies since we went public. And, the teams have all been fantastic and great and really smart people, great attitudes. They work hard, and just really trying to understand a different way of doing things and coming in there, getting comfort on that. And, if you go from one control environment to 10 different control environments, it still adds a lot of risk and complexity, and just getting used to that. And then, having a lot of times where the acquisitions would overlap, time periods, and getting comfort with that, and, putting in the right controls and processes. And it's kind of like you have to do it 10 times, right? I think you heard me mention that, there's a big SOX project that we put on the Grubhub a couple of years before the IPO. And, each time we acquire a company, it's the same kind of thing of understanding where all the risks are of this acquired business, putting in key controls, and then, what's reasonable to not slow down the business and growth of that particular, entity that we acquired. And, getting business leaders to follow a new set of controls when they were private is always a challenge, or something new.
For sure. Yeah, Mike, in your experience, do you have any other words of wisdom here on kind of the role change? Especially, you came from public to big company, pre-IPO to IPO, and now, you're the co-founder of your own company. Any kind of role changes along the way, and how our audience might be able to prepare for that?
Yeah, and I would actually, I think you could relate my progression to that of a controller scaling through a company. I guess just to call back to my time at EY, the audit experience, I really did not appreciate it while I was going through it, but you come out of it with just so much knowledge about how businesses run and operate, and if you're curious enough while you're doing it, you're able to learn so much about how companies run, and you can really learn from the numbers and kind of project from there, which is great and has served me really well with Flowcast. There are just all kinds of random things that come up, and for some reason I know about them because, I audited this one account this one time, or talked to this one person about this one process. And so it's been way more helpful than I ever would have expected. And then what I from a career kind of in perspective of what you need to do, I really did not appreciate how challenging the controller position is. Part of why I wanted to write a book about it was after I started Flowcast, went on the road, started speaking a lot, went to a lot of conferences, and through all of that, met a lot of controllers, and realized that the job is just way more complicated than I'd ever given it credit for. And the job's not getting any easier because CFOs are looking to punt more and more responsibility onto the accounting department so they can focus on, what they think is fun. And so what that means is, as a controller, you need to, obviously be good at accounting. You got to understand technical accounting, be able to review reconciliations and make sure that journal entries are getting booked appropriately. You also need to manage people, which managing is a very underappreciated skill set. I will just say straight up, I'm not very good at it. Still haven't learned, and it's just kind of not in my persona to really be a great manager. But that's a whole nother skill set that needs to be built out as you scale with a company. And then finally is at some point the team's going to get large enough to where you need to transition out of being a manager and into being a leader as well. And like when I look at someone like Brandt, I think that's Brandt's skill that's enabled him to scale within Grubhub. Is he's a true leader and is someone who doesn't have to manage people or be in the weeds. He's just an inspiring boss to work for, and that's how you get great people, and that's how you get stuff done. So that's the challenge. Is there's this evolution from number cruncher in the weeds to all of a sudden you're doing managing and crunching numbers, and then one day you're a leader and you're managing your accounting managers and your directors. So things evolve, and you kind of have to evolve with as that happens. And yeah, a big part of why I wrote that book. I love this career progression stuff. It's really interesting to me.
No, Lindy, I think the ability to inspire is something that doesn't get enough attention. You'll see a lot of chief accounting officer friends I have are very inspirational in their teams, and inspiring them to get better in their careers, do better work, and just getting them excited. A good friend of mine is Joel Del Preto. He was chief accounting officer at Groupon. Now he's CFO of Sprout Social. He's very inspirational. There's a gentleman named Alan Ramsey, who was a former chief accounting officer of Yelp. Super inspirational, gets his team fired up and passionate about accounting. And you start to see leaders like this that are in the profession that aren't your typical accountants that get the teams thrilled and excited to go to work each day. And it just resonates in the organization when you have someone like that.
And the key to making that happen is hiring great people so you can trust them to do the work and manage the rest of the team, so you can take a step back and focus on being that leader, because it's a very different mindset.
So true. Really, really good advice here for our attendees. Mike, I think I'd like to have you back here. You're on our board, but to talk more about the controller's code. Would you come back and chat with our?
No, would love to. I love that stuff. I've always kind of before Flowcast, my goal was to become a CFO. So moving up in my career is obviously very important, and done a ton of work on it. Talked to a lot of people, so I'm more than happy to come back. Love talking about that.
Great, fantastic. Okay, so I've got a couple more questions are coming in here. Let me just take a look. We talked about, one came in, what skills do you look for in a controller? So we talked about that. I mean, I love the number cruncher to the crunch and manage to the leader. I wrote that down from you, Mike. I think that's really great. And Brandt, you talked about the evolution of the controller as well. So that's fantastic. And
with that, so the hiring persona is different based on stage, and then the hope is that the person you hire early is able to develop those skills such that they can scale, and you don't have to hire someone above them. And that's why I think Brandt is such a great panelist here, is he did all that and he scaled with the company, and there are very few people who have his scaling story.
Well, Mike, there's a story I was talking about. You scale or get scaled, right?
Yeah, totally.
You'll see a lot of times that, sometimes you'll have someone that's a great fit for a company when they're 10, 20, 30 million in revenue, but you get to $1 billion or 500 million and, the skill set may not translate as much, where, you may have to bring someone in who has experience at that level,
Yeah. And the other thing I've noticed is the way you move up is very counterintuitive. You actually have to do less work, and that's very difficult for a lot of people to let go of some of their work.
Those are great words of wisdom. Do less work when you move up. Love it. Be more strategic, right?
Mm-hmm.
Yeah, totally. If you're reviewing transactions all day, you're focused on that, and it's really difficult to pick your head up and think, if I make this change, actually it could save us way more time than whatever I'm doing right now. And it is a difficult transition, especially for accountants, because a lot of us are control freaks, and I'm not going to sit here and say I'm great at it. I'm the CEO and I love digging through metrics and numbers and everything. It's still something I'm working on, but it is very, very important.
So true. I think another, one of our other attendees just sent in a note saying, yeah, that, let me read it here, would be great to have another workshop or session on the skill sets of the controller and how you do evolve. So that's good. Thank you very much for that. We will make a note of that as well for future programming. We're about getting toward the end. I wanted to see if you guys had any other final thoughts. Otherwise, I'll go to a little bit more information about Controllers Council for our attendees.
This was a pleasure speaking, and I appreciate you thinking of me, and I'm excited to give back to my profession and share my experience.
Yeah, I echo that. I'm so excited. You're all making this effort to really form a community for controllers. I think it's an underappreciated role and one that's really challenging, and there should be a community around this. So I love that you're doing it. And for this topic, Brandt already touched on this, but the IPO is like one of the most rewarding experiences in accounting. It's a grind, but ringing the bell, watching the team do it, and seeing your ticker out there is pretty unbelievable. So just while you're going through the grind, and know that the light at the end of the tunnel is really great, and it will always be on your resume, and is the best learning experience in accounting that's available.
Yeah, Mike, it's weird. I mean, companies will contact you just because you were part of an IPO process, right? They'll
Totally
want to talk to you just because you have something that's proven you're successful in your job, right? Because IPO wouldn't have happened if you weren't, right?
And when you're doing the IPO, like being able to see around the corner, you know when what's coming up is so valuable. Oh yeah, okay, we're gonna get SEC comments. It's really helpful. So it really is. I'm so excited for anyone who's able to go through it on this line.
Yeah. And Lindy, real quick, I also want to, I have a fantastic team, and I just want to thank some of the team members, Akshay, Bruce, Kevin, Ruth, Kathy, Rob, Catherine, Bunsary. Who am I leaving out? Michelle, Patricia. I hope I'm not leaving anyone out. Just really, really great team members that allow me to be strategic and really function in my job. And if you don't have a good team, you're not going to be successful as a good chief accounting officer.
Amen.
That's so true, Mike.
Yeah,
Amen.
Totally agree. Could not agree more. It's all about the people you have. Yeah.
Yep. Well, fantastic. I did want to share a little bit of information about the Controllers Council with you. We have some links here. We are a national community of accounting and finance professionals, and we are really pleased to present programming like this to you, to your peer group, to be a place where you can get information and also recognition for the hard work that you do. We will be holding events. They'll be virtual to start with a Controller of the Year Recognition Award, moving in key cities around the country and moving to a national program as well. But and we also have lots of great events coming up. There is one more slide here on the events. You can go to the next slide. So I wanted to make sure that you all knew that we have saved the date. We've got coming up in 2 weeks' time, we have on July 30th, the Black C-Suite, Challenges and Opportunities. Brandt's going to be back for that one, helping to moderate that panel as well. Please join us for this really, really timely and pertinent and important conversation we're going to have. We would love to have you there. We've got Learn More About the Controllers Council coming up on August 6th, Saved by the Controller, Tales from the Boardroom on the 13th. And then we've got a webcast in September launching the Controller of the Year program. We hope you will join us for that as well. Then we've got on the 15th of September and October, we've got some other webcasts and roundtables that we've got going on. So we hope you can join us, become part of our community, contribute, learn, and hopefully we'll be helping your careers moving forward. I really appreciate your time today, Mike and Brandt. I thought the conversation was compelling and pertinent, and you gave our attendees lots of really good advice. So I want to thank everyone today, and let us know if you have any questions. Please feel free to reach out or join our community. Thanks, and have a great day.
Thank you.
Thanks for having us.
Thanks for having me.
Bye-bye.